While you were in your quarterly board meeting last week, 3 of your competitors just launched AI-powered revenue streams that are generating millions in passive income. They're not just catching up to fintech disruptors, they're leapfrogging them entirely. And the most profitable part? These revenue engines work around the clock, creating value, while traditional banks are still figuring out their digital strategy. I'm your host, and you're watching Advanedge Consulting's channel, where we bridge the gap between traditional banking and the dynamic world of fintech. If you're a banking executive or financial institution leader, this episode contains insider intelligence about the AI monetization revolution that's reshaping our industry. Right now, here's what's happening in the market while most institutions are still debating their next move. A regional bank we worked with recently implemented an AI-driven customer intelligence platform. Within 18 months, they're generating $52 million annually from AI-powered cross-selling, predictive lending, and automated wealth management services. That's not a projection. That's actual revenue flowing into their bottom line every quarter. But here's the reality check most banking executives aren't prepared for. According to our latest industry analysis, institutions that haven't begun their AI transformation by Q2 next year will face an average revenue disadvantage of 30 to 40% within 3 years. This isn't a technology upgrade we're talking about. It's a fundamental shift in how financial services create value. The problem isn't that banks don't understand AI is important. The problem is most institutions are approaching AI like it's just another software purchase instead of recognizing it as a complete revenue architecture transformation. Let me show you what I mean. Last month, we analyzed the digital strategies of over 200 financial institutions across the country. Here's what we discovered. 87% of banks are still treating AI as a cost center, focusing on efficiency and automation. Only 13% have figured out how to turn AI into a direct revenue generator. That 13%, they're the ones pulling in those $50 million revenue streams. An institution we recently partnered with was spending 6 months on every commercial loan decision. Their lending team was drowning in paperwork, their approval rates were declining, and they were losing deals to faster competitors every week. We helped them integrate their existing systems with advanced AI analytics, and the transformation was remarkable. They're now processing loan applications in days instead of months. Their approval rates increased by 38%. And they've captured a completely new market segment of time-sensitive commercial borrowers. But here's what really changed the game for them. The AI system doesn't just approve loans faster. It identifies cross-selling opportunities in real time, predicts customer lifetime value with 93% accuracy, and automatically generates personalized financial products for each client relationship. That single AI implementation turned their lending department from a traditional approval process into a revenue-generating machine. The institutions we work with that are winning this transformation, they understand something critical. AI isn't replacing their banking expertise. It's amplifying it exponentially. They're using artificial intelligence to see patterns their competitors miss, identify opportunities that traditional analysis overlooks, and deliver personalized financial solutions at scale. Now let's talk about the technology infrastructure that makes this possible, because this is where most institutions either accelerate or get stuck. The foundation of every successful AI revenue strategy we've implemented starts with core banking modernization. Here's the reality. Fiserv, Jack Henry, and FIS are the big 3 core banking providers serving about 70% of U.S. banks. These platforms have evolved significantly, but many institutions are still running legacy configurations that can't support advanced AI integration. The banks generating those massive AI revenue streams, they've upgraded their core systems to handle real-time data processing, seamless API connectivity, and continuous machine learning optimization. A community bank we worked with was running a 15-year-old core banking configuration. Their data was siloed, their customer insights were limited, and they couldn't implement any meaningful AI capabilities. We helped them modernize their Fiserv environment. And within 8 months, they launched 3 new AI-powered services that are generating over $2 million in quarterly revenue. But core banking is just the foundation. The real revenue acceleration happens when you optimize your lending infrastructure. This is where platforms like Abrigo become game changers. Abrigo is a best-in-class loan origination system that transforms how institutions handle credit decisions. The banks we work with that have integrated Abrigo with AI analytics, they're not just processing loans faster. They're identifying lending opportunities their competitors never see. One institution we partnered with integrated their Abrigo platform with predictive AI models. Now their loan origination system doesn't just streamline applications. It proactively identifies potential borrowers, predicts credit performance with exceptional accuracy, and automatically structures loan terms that maximize both approval rates and profitability. That's how modern lending generates revenue around the clock. The blockchain integration layer is where things get really interesting. We're helping institutions build blockchain-powered payment rails that generate transaction fees, create new revenue streams through tokenized services, and offer cryptocurrency custody solutions that attract high-value digital asset clients. A bank we recently worked with launched a blockchain-based trade finance platform. They're now generating $400,000 monthly in new transaction fees. Here's how you can start implementing this transformation immediately. First, audit your current core banking capabilities. If you're running legacy systems from Fiserv, Jack Henry, or FIS that haven't been updated in the last 3 years, that's your starting point. Modern AI revenue strategies require real-time data processing and seamless integration capabilities. Second, optimize your lending infrastructure. Whether you're using Abrigo or another loan origination platform, the key is integrating AI-powered customer intelligence that turns every loan decision into a relationship expansion opportunity. The institutions winning this game aren't just lending money. They're using AI to become comprehensive financial partners for every client. Third, implement AI-driven customer analytics across every touchpoint. Mobile banking, online services, branch interactions. Every customer contact should be feeding intelligence that identifies cross-selling opportunities, predicts service needs, and personalizes financial solutions in real time. Fourth, develop your digital payment infrastructure. The revenue opportunities in embedded payments, real-time transactions, and blockchain-based services are expanding rapidly. The institutions that build these capabilities now will own market share for the next decade. At Advanedge, we're helping banks navigate regulatory requirements while implementing these advanced technologies. The compliance landscape for AI and blockchain is complex, but it's not a barrier if you have the right strategy and implementation approach. The future belongs to financial institutions that understand this fundamental shift. AI isn't coming to banking. It's already here, and it's generating massive revenue streams for the institutions smart enough to implement it strategically. Your competitors are already building these capabilities. The question isn't whether this transformation will happen. It's whether you'll lead it or get left behind. The window is open, but not for long.